Well, good afternoon. I am very excited about this opportunity to unveil what is really some brand new software that is aimed at helping business owners and founders exit successfully. Now, the contents of this video are aimed at describing this not only to them, but also wealth managers who might be interested in making sure that their clients are able to receive the best resources available, but also for those in the equity industry, private equity, venture capital, investment banking, family offices. What your interest in is with this software is aimed at helping greatly improve holdings, or if you're in an investment banking situation, basically ensuring that potential businesses that will be involved in the M&A process are fully optimized and are as ready for sale as possible to ensure that you get the most value. So even though there's a wide range of people who would be interested in seeing what is in uh, this software package, the reality is I want you to be able to see very quickly and clearly how this package is going to be aimed at helping optimize very quickly a business that the owner or whoever or whatever they look like is ready to exit. So let's go ahead now and just take a look at the this software. This is called FCPMS, or the Fractional Client Project Management System. And what you are seeing here are the major components that make up this system. The first one, clients, what this is actually going to be a view I'll come to last, but it is essentially a tracking system for our four-phase plan that will show uh, how everything is developing. So that way, you as the business owner are able to see the progress that we're being made. Of course, if you want to have somebody, say, for example, your wealth advisor or anyone else conceivably be able to see it, you'll be able to see this view. The other 8 modules that we're going to go through are aimed at helping us develop um, scenarios and simulations, which will help us in a long way identify what route you want to go. So these tools, while they're very much interactive and they're very, very analytical, at the same time, the purpose is to be illustrative to show, okay, if we do this, then we can expect that. But in a contrasting scenario, if we make this decision, we can expect this. And it will help. Well, obviously, I'm not going to say every situation is going to be painstakingly clear. It will help us out substantially. So let's start out by taking a look at this module, the exit planning and valuation. And what you'll see is there are 2 areas underneath this: business valuation calculator and the value driver analysis dashboard. Now, if you are familiar with our exit planning tool suite, what you're going to discover is there are a lot of similarities with this business valuation calculator and that. However, this is designed to be a little bit more comprehensive. Um, and what's nice about this is, you'll be able to put in the company name, select your industry. This, again, it's a little bit more um, detailed when it comes to industrial breakout than our valuation calculator. And once you put all of this information in, what you'll see is we'll be able to come up with really, it'll give us what the multiples are, but it will also give us the value. So what's nice about this is we'll be able to take a look at where things stand and get a little bit deeper than a business valuation calculator. This is basically going to be aimed at something that we can be kind of tracking as we move forward with the business. And this will be something that likely you would see on your progress reports, whether it be the 90-day progress or the monthly progress report, showing, okay, because of the work that we've done, this is where the business valuation stands. The next tool, the value driver analysis dashboard, this one is designed at really helping us emphasize, really identify and track the drivers that help when it comes to business valuation, aka when it comes time to the actual sale. We're able to track things that, okay, a business valuation will look at and go, okay, yeah, this is very clearly a business that has value. And what we'll be able to put in is we'll put in, you know, these numbers, and what we will do is once we've assessed all of this by putting in all of this information, you'll get quality scores, and obviously it'll show what the valuation range is. So really, what this is going to be a bit deeper diagnostic, but it's going to be aimed at showing how we're tracking when it comes to really the key valuation drivers when it comes to exit planning. So that is the first module. The next module is our financial analysis module. And really, this is where we're going to be getting into the nitty gritty when it comes to making sure that the business is in great shape financially. The first area that we're going to be looking at is the budget development and risk assessment. And what we're going to be doing here is we're going to be taking a look at, the budget, and we're going to be identifying what level of development the actual process is. And really, what you'll see here is, okay, it's all the way from ad hoc all the way up to optimized. And most likely, there's a good chance that with any business, it's at varying levels, but obviously our goal is to get it up to level 5 where everything is fully optimized. And what we'll see here, is we're going to take a look at, as we're developing this, just, okay, here are the impacts that this optimization of different areas of the budget development process will have. And what you'll see is numbers like this is, the risk reduction, cost savings, what your expected ROI is. And, you'll also get risk profiles as well as recommendations. So that's the first thing. And, that is going to be key because, one area that we develop, it's not just budget development, but it's also controls and making sure that proper controls are in place to make sure that the budget is not only being managed properly, but, there are no issues that could possibly result in criminal activity. Cash flow forecasting tool. What this is going to be, it's going to be a very helpful tool for us when it comes to getting the business optimized. So really, here's what it is we'll take the data, your monthly revenue, operating expenses, current cash balance, and, we'll figure out what your actual growth rate is monthly. And, this will give us multiple scenarios, and then the time to exit, which, we'll develop a tentative time frame right at the beginning. So we'll obviously be able to modify this. But really, what this is going to be aimed at is just showing, how our cash positions could actually look like. And, obviously, generate the forecast will show up, but really this is going to be a tool that would be helpful for us not only in driving up value, but also later on we'll see it may be something of value when it comes to helping position us to pass stress tests, because after all, as we have learned over the course of the last few years with the pandemic, the aftermath, the reality is black swan events can really put a great deal of stress on a business. So even though obviously getting things strengthened for a good cash position, as well as just making sure that things are well optimized and everything is functioning well from a cash flow perspective. The big thing we're going to need to make sure of is like, okay, well, once we get to what I like to refer to as having a year's worth of cash on hand for operation expense. In other words, let's say your budget is for 10 million. Well, if you have $10 million of cash on hand, that means that you can actually operate for 12 months without bringing in a single dime. And that really is one of the metrics that I like to do. It's something that I did when I was president of an orchestra, just aiming to have 1 year's worth of cash on hand in your reserves. So that way, you have a lot of leeway. And that will be one area that we would be looking towards, is just making sure we have that. Um, so that's just an example of one of the ways that we could use for cash flow forecasting, is that we realize, yes, the reserves need to get bulked up a bit. Inflation, this is a dirty word here. That's partly because of, the problems we've had the last few years. And what this calculator here is, it's basically designed to just show us the impact that we can expect that inflation is going to have. We can obviously do historical retrospectives, but the aim with this is just to calculate the impact the inflation is going to have. And it's a type. Part of the reason why is just because of the fact this is another tool that, especially when it comes to cash flow, we may decide okay, this is going to be something that is well worth looking at, just because the last thing we want to do is make decisions based on cash flow that inflation will show us as really undercutting decisions that we're making. It also would be a helpful diagnostic tool when it comes to pricing, because it would reveal that, okay, because of the course that inflation is taking, we need to adjust because inflation has eaten away substantially at what had been a good price. So there are a lot of ways that we would be able to use this inflation calculator, but that it's a key tool that's aimed at being adjustable based on what the CPI index happens to be at a given time, and we'll be able to project out saying, okay, this is what the impact of current inflation is going to have on the dollar. One thing that I'm not going to necessarily say we're going to use this, but should we decide capital investments are going to be necessary, we have this tool that is aimed at developing investment campaigns. Capital campaigns, obviously, are what nonprofits would use. But basically what we would be looking at is, okay, you have a campaign that's already been set in here. And, you have the expenses, you have revenue, basically they'll be used for covering it, and then you would have a timeline as far as goals and stuff. So really what this is trying to show is like, okay, what the budget would be, what the projected revenue from these investments would be, what our projected ROI would be, and then also even, what the break-even point. And, we have charts down here. And obviously the ability to generate a report, which would be easily shared. So the point of this tool is the goal is to essentially develop a very complete and thorough report and plan, because what my experience has been when it comes to directing any type of investment campaign is making sure you have a very good budget, so you know exactly what you need. Make sure that you have everything thoroughly itemized, just because the last thing you want to do is create this budget and realize, I didn't add something. And then obviously with revenue is you need to make sure that you have the revenue to come in that'll be able to cover it. And obviously reasonable timelines, just because of the fact that, sometimes you may be able to knock it out very quickly. Other times it may take time, especially if you have multiple sources of funding, and some are going to take longer than others. But this is a tool that we have that would be used only in the case that we decide that we need to have some targeted investments. It could be the acquisition of property. It could be the acquisition of assets. It could even be the acquisition of another business. Whatever it is, this is the type of tool that we would use in order to put together an investment campaign. The strategic scenario planner is key, just because of the fact that we need to be able to develop comparable scenarios. And as you can see here, this is a business with an annual revenue of 1 million, costs of 700,000, employee count, average salary. Basically what it's trying to do is we have all of this, and then, optimistic, we have this scenario, a realistic, and then pessimistic. And then once we calculate the scenarios, what happens is we are presented three possible areas that would likely happen. And obviously, we have different time frames that we could have. But what this is trying to do is this is trying to show us multiple scenarios that we could conceivably face. And what's nice is it gives us an idea like how we would be able to plan on them. And again, this is not necessarily a tool that is aimed for stress tests for the business, but this is aimed at helping us get an idea of what an optimistic, a realistic, or a pessimistic viewpoint when it came to cash flow and expenses would look like. So the next tool in this area is a value driver analysis dashboard. And what we are going to be using this tool for is, we're going to be inputting, key metrics. And what this will do is once we've done that, it'll really show us these stats, which will be very helpful for us when it comes to just really determining how we're doing. Because at the end of the day, a lot of what we're doing is aimed at improving the business operationally. And while I'm a believer that finances are a good metric when it comes to health of the business, at the same time, really, the better they are, the better managed things are. So really what this is going to do is this information here is going to be helpful for us when it comes to identifying, okay, how operationally efficient are we? Because if we are becoming very efficient and we're able to do far more with what we had, then these numbers will be increasing. And, we'll be able to see just how effective we're driving up the value. The final area in this is our working capital optimization calculator. And this, this would be the type of thing that, if we've decided we do need to do an investment campaign, we're going to need to figure out, okay, this is going to be key. But other ways would be like, okay, we're trying to boost profitability. Well, what we're going to do here is we're going to come here and we're going to start, trying to lay out everything. We're going to just have optimization targets. And really what the point of all of this would be is like just showing, okay, here's what our current working capital is. What are some ways that we can operationally improve to just bolster our working capital position? Because again, working capital, if we're trying to grow a business, we're going to need it. If we're trying to sell a business, the better our capital position is overall, the better off we will be. So that is what this tool is going to be. It's going to help us to just make sure that our cash generation is maximized to the fullest, regardless of where we are. If we're heading into the exit or we've decided, yes, we need to make some key investments in order to make this work. So that is the second module. The next module we're going to look at is intelligence and analytics. Analytics are key, and early on in my career, I did a lot of analytics work. And here, what we're going to be looking at is we're going to be trying to do a lot of analysis about our clients. And what, obviously the user, that user that refers to clients, and we can identify based on the user segment where they would where we are, the conversion rate, average session duration. This could vary from one person to person, especially in retail, or so that while that will look a lot different, the unique customer interactions is key, because at the end of the day, if you have a conversion rate of 15%, or let's say 10%, well, one of the ways that you're going to help really maximize that is by increasing the total unique number of interactions. More interactions mathematically, you're going to actually see a higher number of conversions. The conversion rate, obviously, that'll be key for us. to figure out ways that we can improve. And there are a wide range of ways that this could be done. It could be deciding, realizing, okay, maybe some marketing tools and techniques we're doing, they're not necessarily that effective. We may need to adjust things there. We may decide, okay, well, our client base, we need to find ways to strengthen our younger clients, really help grow the market, because we may say have a lot of baby boomers, and we want to get more millennials and Gen Z. So obviously addressing solutions to increasing that conversion rate, there are quite a few of them, but that is one area that we would be looking at. Obviously the visualization dashboard, and other areas, business intelligence, this will help us out as far as getting an idea about how we're using this data. And obviously the outcome simulation will show us, okay, once we start putting all of this information together, what we can expect. So this is a tool that will be helpful for us when it comes to determining, like, okay, where do things stand, but more importantly, what do we need to do in order to improve things? Is it just more interactions? Is it finding a way to get those interactions longer? Is it a time, like, for example, okay, do we improve our conversion rate? And really that, as well as even the sources of intelligence when it comes to analyzing it, those are going to be key for us when it comes to using this tool. The competitive intelligence and market simulator is helpful because at the end of the day, while a lot of what we're going to be doing is going to be aimed at, like, say, for example, internally, there's competitive analysis that we're going to need to be doing, just determining, okay, what is everybody else doing? Obviously, market intelligence is, okay, what is the entire market doing? So this is one of those areas that, while obviously I believe that, if you really do want to increase your value to the fullest, you need to be more focused more on what you're doing as opposed to what everybody else is doing. But this is going to be helpful when it comes to benchmarking. And as you can see, scenario planning, it's based on, that's basically taking into account the current market and then investment landscape, which I can tell you when it comes to securing funding for businesses, especially if, say, for example, with venture capital, these days, it's definitely not great, just because of the fact that exits, they're taking a while. So all that to say is that I can almost tell you in advance without looking what that would look like. But all these other modules, what they're aimed at is trying to compare where we are with where the rest of the market, or specifically the industry, is. So that is the module on intelligence and analytics. M&A management, this is key for us just because of the fact that, our goal here is to manage the last part of our four-phase plan, which is, really guiding a business through the M&A exit. This is going to be a tool that is going to be useful for us in terms of preparing the business and making sure that we have everything ready, so that way we can talk with the M&A solution and say, okay, we have all of these documents. And what's nice about this is our due diligence checklist and document tracker. We'll be like, okay, these are all the documents and these specifically categories. We'll get an overall completion. Okay, there are 26 total items that we are looking to complete. And the faster that we're able to get all of this stuff together, the faster we're able to move forward. And I mean, obviously, what I would like to do is, as we're starting phase 4, which is when we're basically trying to get things tightened up. This is going to be something that we're going to be looking at as while we're putting the finishing touches on all of the documentation that we've been working through, the optimization, just making sure that we have everything properly institutionalized when it comes to memory. This is where we're going to be like, okay, now let's make sure we start getting all of our ducks in a row and that we're able to supply all of these documents. So that way, when we sit down with whoever is handling the M&A solution, we're able to hand them, say, okay, here are all the documents that we need. We are ready for this process. Also on this is the quality of earnings simulator, which, this is going to be, obviously that was preparing for us for the business to be sold. What this is going to be doing is that this is a tool that, is going to help us, analyze internally, as well as, it could also be something that it could be very helpful for us when it came, if we're going to be doing our own acquisition. So this is a tool that can go both ways, but really what it's trying to show is like just how high quality are these earnings. We would use it obviously with ours just because of the fact that, hey, if somebody is looking to acquire the business that we're working on, we want to make sure that we look good. Of course, if we're looking to add another vertical, we want to make sure that the business that we would be acquiring looks good. So this is one of those tools that can go both ways. And really what we're just trying to do is we're trying to get into the nuts and bolts and determine, okay, just how good do these earnings look? So the final one, and this is going to be more of a tool that we would use if we were, say, for example, wanting to add another vertical, is the synergy value calculator. And what this is going to do simply is we're going to put in information in the cost synergies and in the revenue synergies, and then the actual integration costs, both one time and ongoing. And what we will do is once we have done that, we'll be able to calculate. And what that will do is that will show us whether or not there is high synergy or low synergy. In other words, it'll show that, okay, let's say we do want to add another vertical. Well, if we put information in here, what we will discover is, yeah, this doesn't align as well as we thought, or actually it aligns very well. Let's pursue. So this would be something that, in the event that we decide, we want to increase our income, the fastest way to do that is to acquire a business. Well, this would be the route that we would take in terms of analyzing, determining, okay, is there actual synergy and is there actually value in this decision? So with market industry and analytics, this area, these are the tools that we're going to be looking at. The first one here is the ESG scoring dashboard. Really, what's nice about this is it's helping us to determine, okay, when it comes to ESG metrics, how are we looking? Now, obviously, I know that just politically, ESG is a rather troublesome topic. I know that both political parties in this country have their viewpoints of ESG and similar issues. Really, the way I approach it is this: even though I do have a specific political persuasion that I come from, my goal with this is not necessarily to hold with either party. My goal is, okay, I would just want to make sure that our metrics are such that they don't flag by anyone that really matters, and really just make sure that, okay, if things look decent, let's not, if there are problems, like let's say, for example, if the board independence is coming back showing that there is really no independence, okay, yeah, we have a problem there. Or if like it's showing that there's almost no audits whatsoever per year, yeah, we got another problem. But really what we're trying, or even the employee satisfaction, if we're getting a 1, that's a problem, just because of the fact that it means we have potentially a toxic workplace. So again, even though this is a helpful tool, really the purpose here is not necessarily going to go one way or the other politically. It's just going to make sure that, what we're doing is we're being responsible, and at the same time, there's nothing glaring that could cause bad press for the business. Industry benchmark comparator. This is, again, this is something that what we're going to be trying to do um, is, just gain some valuable intelligence as far as, how do we stack up against the rest of the industry? And, these numbers are going to be the areas that we're going to look. So, and it'll be really helpful, especially just because of the fact that it'll show, okay, based on our numbers, are we actually rather large for a company or are we rather small? So this is going to be stuff that will really show where we stack up, which, again, it'll give us an idea about when it comes to positioning, which that's really key as far as, especially when it comes to getting a business sold, is making sure that we have the best positioning possible. Market timing indicator, this is a tool that's going to kind of show us, okay, how are things going when it comes to M&A conditions? Because the last thing that we want to do is we want to exit into a situation where the M&A outlook is not good. I know earlier in this calendar year of 2025, things were actually looking really good. And it was so there's always a possibility of, like, okay, things like I were to do an analysis and this would come back as unfavorable. Well, obviously we would need to adjust that. And as you can see, this is laying out the pros and cons. It's showing, the favorable factors, also the risk factors. And then, when it comes to strategic recommendations, these are the ones that are offered. And what's nice is this is going to be able to generate, we would be able to refresh market data. So that way, should there be some substantial changes in, say, the next 30 days, we would be able to get that reflected. We would be able to get recommendations based on that. This is one that, it's probably not going to impact us substantially. Well, correction, some industries it will. But, the regulatory change impactor, what's nice about this is, we have real-time monitoring. I could click that, and what it'll do is it'll show, okay, these are changes that are coming down the pipe for us. And, obviously we recently had the Beautiful Bill Act passed. And, there were some substantial changes there, especially from the tax code. But, there could be regulatory changes as far as a new rule that gets set up by, say, the FDA, the EPA, or, any organization that impacts the business that we do. And what this is going to do is this is going to, try to help us gauge what has just happened that we need to be aware about. This next module, operations, is going to be really, really, really helpful for us, especially when it comes to the tightening part. First part is when it comes to customer concentration risk analyzer, is what this is going to do is this is going to show, do we have any risks in terms of we have one client that has an outsized amount of income. Let's say, for example, we were to run a client. Our business is worth $5 million, but we have one client who does $2 million worth of business. Well, what this would show is this risk assessment would flag immediately saying, okay, this is a very high risk, just because of the fact that one client that is actually holding 40% of your business, this is not a good situation. You need to diversify. And really, this is going to be a situation, if we're looking and we start seeing, we're looking at the financials and we see, okay, you have a lot of customers, but it seems like one customer is, taking in a lot of business. Well, we could run this. And what our suggestion would be after this is determining, okay, there's a lot of business that what this one customer is doing is, we need to find a way to diversify and get more business distributed among other customers to mitigate it. Because, again, what happens if that customer decides they're going to go somewhere else? You have just lost 40% of your business. So this risk assessment is going to be the type of thing that, we can look at and to just, determine, like, okay, how risky is this? Okay, or if they're 2% of our business, well, that might be large. If they're 0.5%, okay, yeah, now we're maybe safe. But again, it also depends on the industry. If you're business to business, well, this is good. Having multiple clients that, maybe make up a large chunk of your business, okay, that's a different type of risk. But if you're a business to customer business and you're getting, say, 30 or even 40%, that's a red flag. You have way too much concentrated risk in that one customer. Employee retention risk calculator is one that is definitely key for us, especially when it comes to getting a business ready, because we obviously we want to make sure that key people are identified and are well compensated, so that way, should they exit for one reason or another, we're well prepared. So this employee risk retention risk calculator, what it does is we just go through the name, we can select the department, everything from C-suite leadership all the way to engineering, IT, sales, marketing. Basically, what we're going to do is we select, put their name in, put in their department, years with company, put in all of these numbers, and what it's going to do is we'll just leave all these numbers as is, and let's just calculate the retention risk. Well, what this shows is it's a risk score of 51%. Which means, okay, overall, it's a medium risk. In other words, this would be the type of person that, if, actually, here are the recommendations: proactive retention strategy needed. And then, obviously, weekly check-ins, clear goal setting, and regular feedback. In other words, what you're going to try to do is, if this is a key person, you need to have an action plan to make sure that, okay, you're locking them in. Because, again, and the reason why we have this calculator is, if you're not doing everything you can to lock in your key people and make sure that they're rock solid, well, if somebody comes along with a better job, with better pay and better benefits, better work-life balance, you're going to lose them. And it could be devastating, particularly if you're trying to execute business. So that is what this retention risk calculator is aimed at. It's aimed at helping us, take a look, obviously at your key people, but really I would almost advocate, everybody taking a look at it, just because of the fact that the last thing that you want to do is you want to overlook somebody who actually does contribute substantially, and before you know it, okay, now you need to replace them. So this is a helpful calculator in terms of just really thinking, okay, well, if it's been 12 months since they've been given a raise and they very clearly are, we would consider them a key person, give them a raise. In fact, find ways to develop them professionally, and just whatever you can do to make sure that they stay there. Intellectual property audit dashboard is something that, unless we're dealing with a lot of proprietary secrets, we're probably not going to use. But what's about this is aimed at just, we would do is we would enter in all of the IP that we have in this, and it would show the value distribution and whatnot. And really, what this is aimed at doing is just helping us get the ballpark view of just how valuable our IP is. And this is something that kind of tends to get overlooked, but determining, okay, this is what our IP is, our valuation is, even getting it valued, just because of the fact that could wind up being a significant asset for the business. This is something that we would do if a client were to come to us with substantial intellectual property that was also a part of their business. This is in particular key, just because, especially as we're getting a business ready for exit, this marketing ROI calculator, what this is designed at is helping us to give a very thorough calculation of a multi-channel marketing campaign. And you can see digital advertising, email marketing, content marketing, which that could include print, direct mail, social media marketing, and really, we're putting in all of our numbers, and basically, what we're trying to do is we're putting in all of this information, and we're trying to determine, okay, This is what we're investing. These are our goals. This is what we need it to be, and then just determine what is our ROI. And as you can see, the investment with this campaign is you might look and think, okay, $11,500. That's a lot of money, but with this projected monthly return of almost $250,000, it's like, okay, that's definitely money that is very well spent. And that's what this tool is designed to do, is just to help us to get all of these key metrics identified for a multi-channel marketing campaign, so we can budget and we can execute properly. And then we can just see what the analysis and projections are, and adjust accordingly. So this is a tool that we would use, and really would be very helpful for us moving forward. Operational excellence metrics. This is the tool in this operations that we're just using to build out the KPI dashboard builder. We're just trying to figure out what are your key operational metrics. This process efficiency analyzer, what we're trying to do is we're trying to determine, okay, how efficient is this, and how can we get it better? And then recurring revenue quality, which that is something that it's not every business is going to have. I know subscription-based models, this is something that we would use. And one thing I should mention now that I've gotten to this point is the reality is we're not going to use a lot of this stuff for everybody. We will probably wind up using some of it, only what's relevant. I know the risk is when it comes to having tools, it's like if you have them available, you're going to find a way to use them all. But really, if we wind up only using 15 or 20% of these tools on a given business, that's key. It's just making sure that we have the right tools to address the needs. But all that to say is this is going to really help us, identify, these three key areas, and just make sure that we are operationally as rock solid as possible. Now, this process impact assessment tool is one that, we're going to look at, and, we're just going to try to determine what the expected impact is from, on all of these points. And, again, with process, well, let's say, for example, the onboarding process is what we're doing. Okay, operational. I'll just put in these numbers that are recommended. And what we'll do is we'll just take a look and see what we get as far as this. And the reality is, what we'll discover is whenever we make changes like this, they may not seem substantial initially, but when we do them, look at this. These changes, this time savings, 3 hours per process instance, just that 3-hour time saving, you're saving yourself $10,500 per month. Annual impact, $126,000. Return on investment, 2,420%. Payback period, basically 2 weeks. And you look at this, what you see here is just that simple adjustment by saving yourself 3 hours has incredible impacts. And what this is going to do is this will just simply show us, okay, this is the impact that one change could have in greatly improving business efficiency. So having done that, the next thing we're going to look at is Tech App Operational Impact Analyzer. And really what this is designed at is, as business has become more heavily dependent on tech, what we're going to be doing here is we're just going to simply be entering in information here about, when it comes to analyze using tech, it's like, okay, which package is better? Is this app better, or is this app? Side-by-side comparison, and it'll enable us to be like, okay, what are the pros and the cons? And obviously, it's not like, okay, it's going to always be overwhelming. Sometimes it might be, you know, it might be a little bit closer. Other times it may actually be, you know, rather clear. But the point is, this app is aimed at helping us to figure out, okay, which categories, which tech app is better. And again, obviously with AI becoming key with business, but not only that, but also, just all the different varieties of apps and packages out there, just making sure we have the best fit for the business, operationally as well as cost wise and security wise. Just make sure that we have that is absolutely key. The final tool that we have in this is the vendor and supplier risk assessment tool. Now, with this tool, what this is doing is this is going to be analyzing our vendors and suppliers and just making sure that, there are no issues in our supply chain that, could cause a problem, which obviously for those of us who remember the impact of the pandemic really well, this is a risk mitigation tool, which is going to be aimed at trying to identify, just how well off our vendors are. And, if we're going to, let's see if we can calculate this. So basically what we do is, okay, this is a critical risk. So what's going to happen with all the information that was in there, we need to consider this vendor for immediate risk mitigation, escalate to senior leadership, and implements enhanced monitoring. So in other words, all the numbers that already were in here is, even though is what we're looking at is, it's very clear that even without the annual spend or vendor name, all this other information that we had was already flagging it like, this needs to be addressed. So that completes our operations module. The next module that we have is more administration internally, because what we have is with our fractional model is we serve clients on a 1 day per week model. And with this Fifth Friday calculator, what it's aimed at doing is helping us determine, okay, which months have a Fifth Friday, because what this is going to be is this is viewed as our wild card day. This is going to be the day where, for some reason, if we need to have an additional work day, because again, we're built structured to have 48 service days for the entire servicing calendar year, which, it could begin in January, could begin in September. But the point is, if for some reason, if we're not going to make it to 48 within that calendar year, we can schedule with one of these Fifth Fridays, just aimed at just saying, hey, what we can do is, since we're currently at 47, we really need to get another one in. Let's just take that Fifth Friday of January or Fifth Friday of May and just plug that in. Obviously, this is more impactful for Monday clients just because of the fact that when you add in all the Monday holidays, it's already right at 48. So, and that's not including the 2 weeks that Evan Duke Enterprises closed down at Christmas. So really, all that to say is our goal when it comes to using this Fifth Friday calculator is just to make sure that we know when the options exist. So that way, if we need to reschedule and we've already missed more than the allotted time, we can get a new date on the books. Holiday calendar, this tool is helpful for us when it comes to the planning as well, just because of the fact that it's going to show us, I'll show you right here. It shows us, I click on show operational impact, and it'll show, okay, this is when all these holidays hit. Obviously, Wednesday holiday is a Friday holiday. Basically, all this is trying to show is help us again with planning. So that way, if we know that there's going to be a holiday that's upcoming, or we know when holidays, like, say July 4th, Christmas, New Year's, holidays that aren't necessarily fixed on a specific day of the week, or even Memorial Day, which we know it's always that last Monday of May. It's like, okay, when does that fall? So this this is a tool that's more helpful for us for internal planning. The final key module we're going to look at before cycling back to the clients module is a black swan event, impact modeling. And this is key because what this is designed at for us is helping us determine how well positioned your business is. So I'm going to just leave these defaults up, but what I want you to do is take a look at these areas. Risk tolerance level and revenue diversification are moderate. Cash reserves, you're at 6 months. Well, if we run a black swan analysis, what we'll see is we have an overall risk score of 24%. Vulnerability index is rather high. The resiliency score is at 52%. So basically, you look at these numbers is, yeah, you're going to come through it a bit bruised. But, let's say we take the cash reserves, and that's the only change we're going to do. Let's bump them up that we have 12 months. And let's run the black swan analysis. Okay, so overall risk score is now down to 15%. Vulnerability index is at 25. Resiliency score is at 62%. Now what we'll do is we'll do the revenue diversification, and we'll say that, okay, we've managed to get it high. We're not going to say that it's as high as possible, but let's see what that does. And sure enough, 15% for overall risk, 15% vulnerability, resiliency is 74%. So what we're seeing here is with these numbers, we're tracking in a really good direction. Now let's just say, okay, with revenue diversification, let's say it's excellent as opposed to just high. And if we have that along with the cash reserves, well, look at that. We're still at 15% overall risk. Vulnerability is down to 9%. Resiliency is 83%. And again, the overall risk, what I should mention right here is that, it's not like we'll be able to get through something completely unscathed. I mean, I'm sure that anybody who was running a business during the pandemic would be quick to acknowledge that, yeah, even businesses that were well run and were able to, maybe even get ahead during the pandemic, there was still some risk and they still took some hits. But as you can see, just by simply getting your revenue as diversified as possible, as well as having a year's worth of cash reserves on hand, you're going to sail through the black swan analysis. So next one, and this, I'm only going to mention this briefly just because of the fact that this really has only 2 types of settings. This is aimed at, companies that are either going to be international with business or, they have high debt. And this is going to be something that if we come in and your company has a lot of debt that it's carrying, we will wind up utilizing it a bit. But again, this is a more specialized tool that we have. I'm not going to necessarily go into just because of the fact that there's a very good likelihood, unless you're internationally based or you're carrying a lot of debt, we're probably not going to use this tool. Economic recession impact simulator. This is similar to the black swan event, but what it's doing is it's just going to be showing, okay, based on our industry, well, you see these numbers, the simulation results that I just pulled up here. This is just going to show, based on the numbers that we put in, what we can expect if it's a recession. And what's nice is, like with a recession, we can select mild, moderate, severe, or even economic depression. And really, all these numbers, basically what they're aimed at doing is just giving us an idea about, just how much a recession would hit us. It's possible it wouldn't be that bad, but also, again, just think back to 2008 Great Recession. It's possible it could be significant. And that's what this is going to try to do, is show when an economic recession hits, just how long it would take for us to recover from it. Now, the final one of this stress test simulations is the Monte Carlo Business Simulator. And what this is going to do is this is going to, these are already pre-populated. What this is going to do is this is going to run thousands of simulations. And the valuation analysis, this is going to show you um, really what the distribution is in all of the um, simulations. And so what you're seeing here is most of the simulations are in this area. Okay, well, let's do the market analysis. And what we will discover based on these numbers is this is what the set distribution looks like. The risk is high. And so basically what this is doing is this is taking our information, we're running it, and what we're just trying to do is we're just simulate as many different scenarios as possible just to see how we come out. So let's come back up to the clients. And what this is if you're a client, you're actually not going to have these modules that we've looked at on your screen. The reason why is just because of the fact this is actually proprietary technology. These are going to be tools that we would use in our meetings to show use for analysis. But what you're going to have is actually going to be really helpful because your dashboard, and by this is purposefully this way, so that way no one's information is used. You're going to have this dashboard, and this is obviously a client that I would work on Monday. Obviously, there's no name, and there's a template is in place, but the name. And what this is going to do is this is going to show you. You come up here, and you're going to see the percentage complete, and this is going to show you all 4 phases, and you'll be able to track and see, okay, where do we stand? And what's nice is you click down here, phase 1. Okay, this is going to show, okay, we don't have any of this done. Well, as soon as we get these completed, with each one that gets completed, this percentage will increase. Same thing with phase 2 is, we'll be like, okay, what's the status? Have we completed organizational analysis, gap analysis? Have we completed that? As we complete each, that percentage will complete. With phase 3, which is going to be basically, you see there's a lot of assessments here that are blank. This is going to be where we're going to be really doing a lot of the outworking of all the assessments that were identified during phase 2. So we can just see, okay, are we in the assessment phase? Are we analyzing it? Are we planning based on the results? Or are we implementing it? So basically, we can see. And the beauty of this is if we have multiple assessments going on, just because, it's a large company, we can do multiple things at once. We can kind of see how things are tracking. And once we are completely done with this, and obviously we will move on to phase 4, which, again, this is where things stand here with phase 4 is, standardizing institutional memory and, all the way up until assisting that it's decided the transition has been completed. So that is, in a nutshell, everything that we have with regards to this software, FCPMS. I wanted to thank you so much for watching this. If you have any questions, please feel free to send me a direct message. I just want to thank you again so much for being with us during this almost hour-long discussion. And, I would love to hear from you, just see not only if you have any questions, but also if you feel like what this offers can be of assistance to you. I would definitely love to be able to help you out in any way. So I want to thank you all now for your time and hope you have a wonderful rest of the day.